In this presentation, we will continue on with our comprehensive problem related to a not-for-profit organization, a non-profit organization, and is a private college. We have the information on the left. We're going to enter that into the blue area on the right. In prior presentations, we entered this information, the transactions for the time period. We entered then the closing entries. Now we're going to be entering or recording or making the financial statements of the statement of financial position and statement of activities. As we do so, we will be doing so on the right side here, statement of financial position, and then the statement of activities. Note that there are two trial balances that we have worked through, so don't get those confused. We're going to be working with the top trial balance. This trial balance is where we recorded all the transactions to, and we still have the temporary accounts, the statement of activity or kind of income statement accounts up top with this item up here. And then down below, we copied over the beginning balance numbers and then entered the closing entries. So you'll see here, this has a post-closing trial balance, which only has the assets and liabilities. And then it has the equity or the net assets section, then being the total of the net assets, including the temporary accounts having been closed out to them. This will be helpful for us, and we'll jump over to it when we get to the equity or net assets section of the statement of financial position. Also note that we will be starting with the statement of financial positions as opposed to the statement of activities. Some would argue, many would argue that you should start with a statement of activities. It's not a big deal which one you start with, but just note that some would argue that you do the statement of activities because that'll help you to calculate out the net assets breakout between the restricted and unrestricted. And it will also get you to the change in net assets like the net income number, which you might need in order to create the last section of what would be similar to the balance sheet, which is the statement of financial position. I think it's easier to do the statement of financial position because then you start with something that's in balance, number one, and you get to go straight from top to bottom as you work through the financial statements and then go to the statement of activities and fill in, kind of the difference, the plug, having confidence that you already have something in balance. Now, to do that, we'll have to kind of think about what are we going to do with the net assets section. If you have a well-formatted trial balance, there's a way you can obviously calculate this pretty easily without doing the statement of activities. So we'll discuss that as we get to that part. Just recall that if you have a book question or something like that, of like if it says something like, which one must you do first? It might say that you have to do the statement of activities, would probably be the correct answer. However, that's not really correct. But in any case, let's go through this and we'll then record this out. We're going to start with the statement of financial positions as we typically would. That's with the assets up top. Assets are going to be up top, and then we're just going to go straight through these top to bottom. We're going to pick this up just like we would for a for-profit type of organization. We're going to pick up cash and cash equivalents. That's going to be in the inner column, not because it's a debit or credit, but because we're going to have the subcategory of cash indicated by the indentation and the inner column that we will be recording it in. This is going to be equal to that 7,447. Then we're going to have the short-term investments, which will be equal to, I'm going to say the short-term investments. In cell V4, we're going to say that is equal to that 7,679. And then we've got the tuition and fees. Now I'm going to record these net. I'm going to copy this, therefore, paste it 1, 2, 3 instead of having a formula so that I can write the word at the end of it, net. And what that means is I'm going to record it net of the allowance for doubtful accounts, which is a contra account, which basically is the estimated amount that we believe is going to be uncollectible of this amount. And therefore, we will record it net in cell V5, where we will say equals the sum of these two numbers and enter. So there we have that. Then we have the pledges receivable, and once again, I'm going to record that net. So I'm going to take that number, I'm going to copy it, we're going to put that in U6, right-click and paste it 1, 2, 3. I'm going to put that word next to it at the end again, net. We're going to record that net. And then in V6, I'm going to say equals the sum of, and we'll pick up the 5910 and the 295, and that'll be the 5615. So next we're going to have the prepaid assets. So that one's going to be straightforward. Prepaid assets is going to be equal to the prepaid assets. And then we have the property, plant, and equipment. And once again, I'm going to record that net of the contra asset account, the accumulated depreciation, and therefore I'm just going to copy the property, plant, and equipment. We'll put that up top, pasting it 1, 2, 3, and then we'll put that trusty word next to it called net, or named net, or spelled N-E-T. And then we'll do the sum of equals the sum of. We'll pick up the property, plant, and equipment and the accumulated depreciation. And there we have that. Next, we're going to pick up the investments, finally. And lastly, we will pick up the investments, at least for the asset portion of the financial statement, of the statement of net position. That adding up to the 164,910. And there we have that. That's going to give us then the total assets. Total assets, total assets, total assets. We're going to then sum that up in the outer column. So within the outer column, we're going to pull out the trusty sum function with the equals SUM. Shift 9, I'm hitting the up, then over, and then shift, and I'm adding these up. This is the way you can do this with just the keyboard if you so choose. It's more dorky, more nerdy, and therefore better. So we're going to say there's that. And then we have the liabilities. So liabilities are going to be next. So the liabilities are going to be these items in orange. So we're going to say this is equal to the accounts payable and accrued liabilities. I'm going to flip the sign here. So instead of equals, I'm going to put negative of that number. Note again, we're putting this into the inner column, not because the inner column is a debit or credit, but because it's a subcategorization. And so we're going to put that into the inner column. And then next, actually, I'm going to move that down. So I'm going to have another header here. Let's add another header. The other header is just going to say net assets and liabilities, just label in the second half of the statement. Then let's go to the liability. Actually, let's put this here, and then we're going to go to the liabilities. So if I haven't confused you enough, we're going to put in U11 liabilities and net assets as another subcategory. And then we're going to put the liabilities down below it, and then the liabilities we will now be adding to them, including the accounts payable. So the accounts payable, which we will put in the inner column in V13, negative to flip the sign of that 2,185. Next, we have the deposits held in custody of others. Once again, we're going to take that number and flip the sign. So I'm going to say negative of that 708 and enter. Next, we're going to have equal to the unearned revenues. And I'm going to say negative of that 924 and enter. And then finally, we have the bonds payable. Bonds payable. And that's going to be negative of the 696,000. So there we have those. And that's going to add up to the total liabilities. That's going to be in the outer column in W17, where we will say equals SUM. Sum this up. The trusty sum function adding up the liabilities. And so there is that. And then finally, we're going to have, of course, the net assets section, which is kind of like the equity section. The thing that's a bit different here, or more different than the rest, than a for-profit type of organization, usually be called equity, possibly partnership equity, or stockholders equity, or just capital if it was a sole proprietorship. This is going to be called the net assets, same kind of concept, however. It's going to be equivalent in essence to the assets minus the liabilities. We're going to have two components to it. We're going to have the component of, we don't need the whole account. Let's just call them, we already have net assets up top, so we're going to call them without restrictions, without donor restrictions, and with donor restrictions. So in other words, net assets without donor restrictions and net assets with donor restrictions. Now, this is where it gets confusing because this is where some people might argue you need to do the statement of activities in order to know what the net assets with and without donor restrictions are. But really, the net amount, you don't really, even this trial balance, I can get the net amount here without doing anything by just summing this up. If I have a formatted trial balance, I could just say, well, that's going to be equal to the negative sum of these amounts. The total is the total. And so if you don't know a breakout in like a partnership or a corporation of the equity section, or here in the not-for-profit school for a net assets, you can say, well, I know what the total is. It's the sum of those. And then you can at least see if you're in balance. You can say, hey, is everything working? Am I in balance? And then I can go back and feel good that I have something in balance and work on what I need to work on from there. So if I add this up, then we are in balance. Now note that summing that up, summing all the blue accounts only works if you have a nice well-formatted trial balance where the credits are negatives and the debits are positives. Then we just have to sum them up and it'll take the credits minus the debits and everything will be good. So I took the negative sum to do that. If you got the debits and credits broken out, then yeah, it would take more work to go through here and you'd have to take all the credits and sum them up and minus them by all the debits. But still, not too difficult. I mean, if you have some kind of system, a computer system like Excel to do that, it should be done pretty easily to do that. Then we just need to worry about these two numbers. What about those two numbers? What do we do with them? That's the breakout that we need to have between these two. Now, again, you might argue, well, we need to do the statement of activities for that. Maybe, but we already did the closing entry, which means we've looked at that for our problem. So for our particular problem, we've already basically done that by doing the closing entry as we see down below. So we're going to jump down here and pick up these two numbers because this is us closing out all of the temporary accounts to their proper net asset account, that being the net assets without restrictions or the net assets with restrictions, and therefore we should just be able to pick up these two numbers. If you add up these two numbers, they of course add up to the 342,857, which is the number that we have here. Okay, so let's do that. I'm going to say negative of the trial balance down below. This is where we're jumping down to the trial balance down below. A little funny action here thing, a little strange thing going on, but that's okay. We once again are going to scroll down and jump down to the trial balance down below. And there we have those two numbers. And if we add those two up, I can then sum this up again. Let's sum this up again, just these two numbers, and see if we're still in balance here and here. Looks like we are. Looks like it's good. I'm going to go ahead and unblue or make this blue then. Make it back to blue. And there we have that. So there's going to be our balance sheet. We can check, of course, that it's in balance. Assets equaling the liabilities plus the net assets. Assets equal liabilities plus net assets. Now we found a home for all of the balance sheet type accounts, all the permanent type accounts. We kind of found a home for all of the income statement accounts, these accounts down below, these temporary accounts, but not really, because we crammed them all into the same home in these net asset accounts. We want to find their own home, give them their own place to be. To do that, we're going to go to the statement of activities.